Hello there. Welcome back to Financial Accounting. This video, we want to look at the calculation of interest on loan. We are going to see what we have there in terms of loan. We can find it here. It's saying loan of Sambo Bank of 18% per annum of 47,500 is total amount of loan. And then we also have to take note of the financial year. Remember, this is 31 December 2021. That's where the year is ending. So the year is starting on 1 January 2021. So we are going to see on the additional information what we have in terms of interest on loan. We have here at item 10 is saying the interest rate on the loan from Sambo Bank was increased by 2% on 1 July 2021. So what does it mean? It means from 1 January to end of June, let's say 30th of June, the interest was 2% less. Then after that, it was increased by 2%. So if you come here, on the list of balances, you'd see that these are the list of balances that were given at the end of the year, which is at 31 December 2021. So the interest at 31 December 2021 is reflected here as 18%. So it means the 18% is the interest after it is increased. So before, which means from 1 January to 1 January to 30 June, it was 18% minus 2, which is 16%. So we can just say 18% minus 2%, then we get 16%. Then the total amount of loan, remember, is 47,700. So we come here, remember, the total amount of loan we have 47,500. So what we are going to do is we are going to calculate interest before it increased and after it increased. So we can come here and try to see the total amount of loan. Remember, we have got 47,500. So we are going to say 47,500. So which means from 1 January to 30 June, we have got 6 months there, which is equal to 6 months. And then from 1 July to 31 December, which is the second period after it increased, we have got also 6 months. So we are going to make a proportion of 6 months, which means half and half. So we come here and say before it increased, it was 18%. We're going to say 18% minus 2%, it was 16%. So 16% is going to imply for the period 1 January to 30 June. So we are going to say 16%, which is 16 over 100. Then we multiply by the total amount, which is 47,500. And remember, this was only for 6 months. So we're going to multiply by 6 over 12 to make a proportion. So you calculate that there, you are going to get, let's try to see. We are going to get which is 3,800. So our answer here is 3,800. This is the first period before it increased. So let's try to see on the second now, on the second period, which is from 1 July to 31 December. We are now going to say our interest had increased by 2%. It was now 18%. So we are going to say 18 over 100. And then we multiply again by 47,500, which is total amount of loan. And then it's also for 6 months, so we're going to multiply again by 6 over 12. So we'll try to calculate that one. We're going to get 4,275. So this is what we have in terms of two amounts of interest of loan, 3,800 plus 4,275. Then to get the total interest for the period, we add the two. So now we are now saying total interest. This is now calculation of total interest. So on total interest, we are simply just going to add the two. We are going to say 3,800. Then we add 4,275. But then when we add the two, we are going to get 8,075. So 8,075 is total interest that you are supposed to put in the income statement. Remember, you're going to say net profit before interest, and then you put your interest as 8,075. So this is what we have, guys, in terms of this video. Hopefully this video was helpful. Those who have subscribe and share. We are still coming to more videos as we prepare for exams. As for this video, I'm signing out and we'll meet again.